Israel's strike in Qatar, a key American ally, has reignited fears of a wider war in the Middle East. And at the same time, we're seeing massive stockpiling from a global economic powerhouse. So what does this mean for oil prices? Let's unpack with Jeremy Irwin, senior oil markets analyst at Energy Aspects. Thanks for joining us today.
Yeah, thanks for having me.
Can I start with the Ukrainian hits on Russian assets? How badly has this affected Russia's ability to output?
Yeah, we've seen in August, they really focused their attacks on the refineries. Now we've seen it pivot towards more of the export infrastructure. So right now, we're definitely seeing inventories in Russia build dramatically as they struggle to both domestically consume it and export it. And it's certainly supporting the oil price globally. We need to understand how quickly these repairs can be made to really gauge the outcome of how long this could linger.
Has that been shared, what kind of damage was done? I know Moscow doesn't usually put out a lot of information, but has anybody had some insight?
Yeah, we can definitely use some satellite imagery to try and gauge the severity of the impacts. And so far, we're looking at least a 4-week outage in terms of their ability to export some crudes into the Baltic Sea. And we're seeing those inventories inland in Russia really start to balloon. They grew by about 10 million barrels in August, and that looks likely to continue here in September.
Let's factor in Donald Trump's threats to sanction Russian oil. There's not a lot of traction to that yet, but if that does happen, how will that sort of further impact the sector?
Yeah, I think that's the big geopolitical risk, sort of preventing traders from shorting oil right now, because we would expect easily a $2 to $3 sort of knee-jerk upside reaction in oil price should you see that type of increased sanction efforts driven by Trump's agenda to sort of defund Putin and bring him to the negotiating table to end the war in Ukraine. So if you see key buyers like India really step away, which has kind of been ebbing and flowing through the global oil market over the last month, that would significantly strengthen, say, benchmark grades and benchmark crudes as they have to shift to alternative crudes.
That hit in Qatar. How are the concerns about that conflict playing out in the oil sector?
Yeah, I would say Russia's probably the key focus geopolitically in the oil market currently. I think people still have lingering concerns over an escalation in the Middle East. But right now, I'd say the market's fixated on Russia as it is, a massive supplier globally, while keeping sort of a side eye on developments in the Middle East.
Talk to me about China, because it is getting oil from different sources, but I'm wondering how much they're holding. Is that clear, and what their plan is moving forward?
Yeah, so what we can say with some certainty is that they announced a pretty aggressive refilling of their strategic petroleum reserves, which, if they filled the nameplate amount, would be about 140 million barrels between Q3 of this year and Q1 of next year. Now, we've factored in about 120 million barrels into our global balances, which does mitigate how much inventories build globally, say in Q4 of this year and Q1 of next year, and would say roughly they've stockpiled, at least 40 to 50 million barrels so far, with aggressive purchases continuing into Q4. I'd say that's about all we can say with some level of certainty at this stage.
And how much is China buying from Russia?
It's significant. The outright number I don't have off top of hand, and especially if you factor in the increase from their strategic petroleum refills, which it looks like some of that crude quality is reflective of Russian crude, but they are a massive buyer of Russian crude. I think that's fair to say. So it's definitely a space to watch.
We haven't talked about OPEC plus, but I'm just wondering what your outlook is for oil, all things considered.
Yeah, I think, look, globally, balances look like they're going to be oversupplied here in Q4 and Q1. And should China take their foot off the pedal to any extent, that situation becomes a lot more bearish. I would say generally we're looking at some weakness in oil going forward, mostly from that accelerated unwind of those OPEC plus production cuts. So far, the exports we've seen out of the Middle East have lagged the telegraphed production unwinds, or production cut unwinds, I should say. But we do expect those exports to start ramping up which is the big swing factor that kind of pushes global balances to be quite oversupplied here in Q4 and Q1 of next year.
Is there any reason for the lag, as you mentioned, from the unwind?
You know, some people have speculated that it was higher crude burn in the summer there as they burn more crude for basically power generation for aircon needs during summer. Now, we think there could be some other alternative explanations that are about maybe some production woes in the upstream sector of some of those countries in the Middle East. But that's still to be proven. I think it will really be key in how much these exports ramp up in, say, October, November, to be able to add some clarity whether those upstream woes are ongoing or whether that's just speculation in the market looking for a narrative to explain the lag.
You mentioned you see weakness for the rest of this year, the start of next year. Have you looked past that at all?
Yeah, we have. I mean, the medium term, say 27, actually looks quite supportive with just the lack of investment we're seeing on the upstream side and non-OPEC supply growth really slowing, with mostly the U.S. growth slowing as they run into more geological hurdles and the lack of their tier 1 acreage is depleted. So we do think there's upside, say, in the medium term, but it looks like you're going to have to endure another quarter or up to a year of sort of weaker pricing before you can get there.
Jeremy Irwin, I will leave it there. Thanks for joining us on The Close. Jeremy, Senior Oil Market Analyst at Energy Aspects.